Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 10th of March. All right, now what a hell of a day that was, eh? Just looking at the US equities where they finished up, the Dow almost down 8%. This is like absolute manic panic, sort of activity. This liquidating positions, free fall, all sorts of things. You can sort of call it what you like, but that's exactly what we experienced, and that's what was going through the market on the Monday open through the Asian session. We also saw the same through that European session, right? So where there's massive panic, huge volatility, and it's very hard to work out where things are coming from. But look at the Asian dollar yen and the Asian or yen crosses, the real risk on, risk off pairs. They are sort of bouncing today. It's no surprise because they were like, it was a bloodbath yesterday. Asian equities, okay, just looking at the top X and the Nikkei, 225, you're looking at a small amount down. This is where the calmness is starting to come back in the market. Now, when you do start to see situations where, in particular, US equities start to hit these sorts of levels, okay, down sort of 8%, 7, 8%, or even above, 2% is alarm bells, but above 5, it gets panicky. This is where we might start to see the Fed start to do some things behind the scenes. And this is what I was looking at just a short while ago. And if I just change over here to the Market Insight page, I'm just having a look at the US Treasury yields, right? So there's been some pretty good moves here, right? The 10-year was down about here yesterday, as was the 7-year. And the 30-year yield was about here, around 1.03. So we've seen a bounce in the yields. They've all sort of bounced, actually even the 5 years as well. So there's been some stuff going on behind the scenes. Now, I've got to assume it's the Fed, right? They've come in and started buying, like holding this market up. This is where they can get calm in the market, right? You come back into the overall markets themselves. That's where the problem was stemming from. And that's what they've done to calm things down. So I would expect a bounce in the US equities going forward today. What we will see is, now you may not have noticed this, is that the news-wise, whatever session is open, Reuters, Bloomberg, or anyone else for that matter, will be asking the central banks, what are you going to do? What do you think about the volatility? What they're trying to do is get them to reveal their hand. Now, this is one of the things that the central banks do have up their sleeve. They have one shot at sort of intervening in the market verbally, right? If Japan comes out and says, you know what, dollar yen around 102 is completely unacceptable. It should be at 107. They will buy it, right? It's a bit of a given that means it should be at 107, not 102, and the market comes in and takes that as a bit of intervention. Now, central banks are going to be very careful with the way they use this because they get one shot at it. If it doesn't come into play, well, then the whole thing is lost and they've lost one of their major tools. I would think at the moment, where all the panic is, it's in the US market, right? North American session. As I said yesterday, very reminiscent of the GFC. You have to look for the Fed to take the lead on this. So there's no point the BOJ coming out and saying, well, we don't like where the yen is. Well, the yen is where the market puts it. So there's no point them coming out and saying something by themselves. They need a bit of, a bit of cooperation with the Fed. And I think it sounds like the central banks have been all talking to each other anyway. Looking at the overall fundamentals now, if we have a look across the data that sort of has been rolling out, what you'll start to find is when the markets are panicking, like in the equity markets like they are at the moment, and the moves in the FX we saw, these fundamentals will be out the window, right? They won't really impact at all. So don't start focusing on those just yet. We probably need another day of calm before we do start to see the fundamentals coming into play. Now, we do start, this is a bit of a shame because we do have some numbers coming out, some employment numbers coming out of the Eurozone. To me, that would be sort of something we would be looking at and potentially sort of looking to get involved in. But at the moment, it's a bit of a tricky play when the whole focus of the market is more around managing volatility and lack of liquidity in the equity markets, okay? And that flows into the sort of risk on, risk off pairs. But as I said, this is a bit of calm in the markets at the moment. We'll have to see how that North American session opens up. All right, so that's where we are. So if I give you a look at the actual charts themselves, if I just come back to the technical side of things, you'll start to see. I mean, this is where, unfortunately, big moves like this take us out for a couple of days at least, because what we have is we have our charts, which have all these groovy trend lines on them, blown out, right? So you're starting to see these massive spikes in the market. They are sort of going to really slow things down. If traders can't work out, and I'm talking about traders in the banks, if they can't work out where to get in, where to get out, they will stay out. Right? There's no need to rush into the market. Some of these currencies are hugely elevated, and you know what? You've got to think there'd be some sort of movement back. The only one pair that really makes sense to me with what happened yesterday is dollar CAD, right? Oil dropped $12, right? It gapped when the Saudis were talking about increasing supply and all this sort of stuff. So basically, the oil move, dollar CAD followed the oil move as it should. That's one pair that makes sense. So keep a close eye on oil and the CAD and the CAD crosses. To me, that's where the potential opportunity is, because that makes a lot of sense. Euro, okay, we're up here around 114. Seems crazy, I know, but you know, weak dollar, bit of panic, and all of a sudden, Europe looks like a great place to be. So just keep an eye on that. We do have the ECB coming up later in the week. Now, they've got to come out with a whole heap of new stuff. So that's going to be interesting to see what happens there. Euro and the Euro crosses will come into play at that time, not really beforehand. To me, dollar CAD, even though we have got that massive gap in the market, is sort of, to me, the pair that makes the most sense. Keep an eye on dollar yen. I mean, that move from 105 sort of 50 here on the or close of Friday down below 102 was just chaotic. I think you'll still find selling up back up towards 105, 105 and a half, 106 at this point. Aussie and Kiwi, to me, they're probably out of play at the moment. Okay, technically they don't make sense, and we're still trying to work out what the RBA cut versus the Fed cut, what that does for us. It's not clear at all, right? And then you throw sterling in there. The sterling has been sort of going up with the weak dollar, but then you've also got, you know, behind the scenes, there's still the UK EU trade talks and all that sort of going on. So to me, that's a bit of a question mark over that pair. Euro, I've got to think, you've got to be getting short this thing, but where? That's the problem, right? We're lacking the fundamental direction on a lot of these pairs. So when I come back into the daily trade routine, just having a look at where the market is, it's pretty easy. You should be able to identify that trading conditions are pretty crap, right? Poor trading conditions. What that means is we don't know where direction's coming from generally. Market drivers, well, you've got these three range of events here that are causing chaos. As I said, to me, the oil, the move in dollar CAD, the CAD crosses, it does make sense. The rest of them, it's panic, right, around the coronavirus pandemic, right? Two big things. Now, looking at the pairs, right, the active pairs, well, you know what? These pairs here, technically, at least, are showing very clear direction. You know, the dollar is moving sort of down against, you know, the Swiss, against the yen, the dollar index, obviously correcting with the euro, and the euro is going up. Now, that's, you can't like say it's not on the charts. So you've got to look at those pairs as potential opportunities. Well, we know a lot of the drivers, they've got no fundamental drivers, which is the problem. And they are geopolitical at this point, so it's pretty tricky. The pairs down the bottom here, to me, I mean, Aussie and Kiwi are going to remain under pressure, especially while this coronavirus goes on and while China is a big part of that. You know, there's a whole heap of external factors putting pressure on the Aussie and Kiwi. I know they're all over the place. I'm not actively trading them at the moment, but I'm watching them and I'm bearish those pairs. And you know what? On a technical bias alone, dollar CAD and sterling are going up, right? Now, if you look at these pairs, like a lot of them don't make sense. Like sterling shouldn't be going up, Aussie and Kiwi going down, etc. As I said, we understand there's a massive geopolitical flux at the moment. You've got central banks acting on trying to calm the markets down. You've got geopolitical drivers impacting randomly. And with the data coming out today, it's pretty much the Aussies, the main focus. As I said, I don't think any of this data will matter. The RBA, Okay, DeBella will be dragged out. He'll be sort of talking some sort of dovish comments saying that they'll do whatever they need to do, etc. So, well, does that change what's happening right now? I don't think so. Right. What I would like to see is the equity markets calm down over the course of European and North American trading today, and then we could start to see the data, which we've got a load of good stuff coming out, especially the US CPI numbers. Now, getting a US CPI number in amongst all this other crap is just a waste of time. So we really need the markets to stabilize today, and then hopefully tomorrow we start to see the market come back and gravitate towards some sort of normal price action. These bond auctions are coming up. I think the 30-year is on the Thursday, I think it is. So we'll just have a look at that. But these bond auctions are going to be very important. As I said, I think the Fed's already in there sort of doing a bit of shuffling around in the bond market, the US bond market. That's stabilized things. And that's exactly what they're there for. Stabilize the market, take out the fear, the volatility, and we'll see how things play out. But we've got still a massive week, right? We've still got huge things coming up, especially the ECB, what they plan to do. Don't forget, Christine Lagarde at the last meeting said, well, hey, let's have a look at our policy because it doesn't seem to be working. So I'll be interested to see what they have to do. Surely they just can't come out and say, we'll do whatever it takes again, because they've already been doing that. Nothing's been happening. So we'll see how that plays out. But don't lose sight of your capital, right? When you're trading through these situations, you've got to make sure you understand what's going on. If you don't understand what's going on in the general price action of the currencies, well, then you're going to ask yourself, why am I trading? Why am I throwing my cash into trades that don't make sense? And this is exactly what, as I said, the guys at the banks will be doing. Well, these pairs here don't make a lot of sense. Dollar yen, well, we saw the gap. We know the panic in the equity market sent it lower. That may be something to work with, especially in that North American session. If you see equities scream higher, I would expect dollar yen to go up, and vice versa. Dollar CAD, keep an eye on oil. Dollar CAD is following oil very closely, so keep an eye on that. And I don't know what's going on in sterling generally. And euro, well, it's loving the sunshine at the moment. No negative European news, but we do have the ECB coming up. That could put a big spin on the whole thing. And we do have a nice support line, even though it's 150 points away at the moment. All right, guys, that's it from me. There's a fair bit going on. Take it easy. This is a microcosm of your trading career. Like, it's 1 or 2 days. Don't get caught up in price action. Don't get caught up in volatility. Trade when you understand what's going on. That's the way it's supposed to work. All right. Have a good day. Cheerio.